Welcome back to Market on Close. I'm Sam Vardis, live from the floor of the New York Stock Exchange. It's time now for overlooked stocks, and we're watching XPeng today as shares rallied to a 52-week high after unveiling its humanoid robot. So I'm joined by George Tsilis, a senior markets correspondent, to get us across this one. What do we know about this company going full Tesla, as it's been described, off the back of its AI day, and the reaction we're seeing in the stock, because it's up 7% as far as the ADRs are concerned. I saw in Hong Kong it rallied 17% overnight, George. So what gives?
Well, I think, if you're interested in, Chinese automakers, I suggest that this one is certainly one to keep an eye on. I mean, it's sort of a dark horse player in the autonomous driving space. But also, we have to consider, competition for companies like Tesla in the EV space. XPEV is actually producing over 400,000 units globally. So they're playing catch up to Tesla, which has, close to 2 million annual units on a for sale basis. So that's important in the context of, getting closer towards profitability. And XPEV is actually not just producing EVs in China and selling in China. They've been expanding their footprint quite aggressively in other areas like Singapore, Europe, very big in France and Norway, as well as Israel. They're starting to sell and produce cars there as well. So they're really expanding their global footprint. But the other thing is their technology, I think, is actually quite compelling, considering they utilize what's called their own Turing AI chip, which means that it's an in-house AI processing chip, but they also provide alongside that vertical integration of their vision language action model technology, which is their autonomous driving software. So if you think about Tesla, Tesla is not just an EV manufacturer. You really could consider it a software and robotics company. XPEV is actually, I would suggest, probably the next best fit in the Chinese market, much like Tesla. And of course, today they unveiled their own humanoid-like robot, which we know Tesla is going to start mass producing their Optimus robot to compete with them, and XPEV is going to be called Iron. So I think this is a very, very much vertically integrated company in the EV space, autonomous vehicles, software space, and hardware, but also robotics really is, again, like I said, a close parallel to Tesla, even though Tesla, if you look at it year to date, has not performed very well at all. I think it's up about 10%, which is actually less than the benchmark market, but XPEV is up, I think, about 130%. So it gives you an idea that this company has been growing quite aggressively over the last year.
Yeah, it's so fascinating, George. I mean, I've been covering this company since it was an emerging EV maker, and you raised such an interesting point. It really brings us back to, the valuation story here, like with Tesla. I mean, is this a technology company or is this a car company, particularly as it sort of makes its foray into technology? And if you've got companies like Xiaomi, for instance, over in China, which is a household electronics name, which has come out with this very popular car as well. So it's been really interesting to see what the Chinese EV makers have actually been doing here. But I saw one take that maybe this validates what Tesla is doing now, which might be actually good for Musk as he needs to hit all these very ambitious targets. But it sort of brings us back to, I suppose, the same old narrative that we wonder whether this, is seen as more of a inexpensive way to sort of play the whole humanoid trade now, like we see with the Barber v Nvidia and maybe the Tesla previously v BYD as well. But I'm just wondering also what the analysts are saying about that path to profitability, because it looks like they're very close to that.
So I think you bring up some excellent points. If you're looking to play this humanoid robotics, secular story, one would say, just looking at the price performance of XPEV relative to Tesla, you can see that maybe the market is obviously valuing XPEV as at a discount than Tesla, because Tesla's trading at, I think, depending how you look at it, 100 to 150 times forward earnings. If you actually look at the price action in XPEV in the last year, up nicely, hitting new 52-week highs, that's very telling, especially in this market, where if you look across the board, companies like Rigetti in the quantum space, or even Oklo, which is going to be reporting earnings, those stocks are down about 30% to 40% since September. So I think the valuation concerns in the market are being demonstrated in other areas, other stocks, where now you can make the case that XPEV is still undervalued, considering this year the company's still expected to lose only 13 cents. Next year, adjusted profits of 30 cents, and the following year, 64 cents. So my point is the inflection point towards profit is coming up for XPEV. Price is moving first, and I think that's quite valuable in terms of what is matching price action relative to the news, which again is all about humanoid robots. XPEV is not going to be scalable in that production. Neither there's Tesla right away, but nonetheless, XPEV is moving in the right direction in their EV and other technology stack. I think that's why it's being rewarded.
Oh, for sure. Investors certainly paying attention to this name. Thank you so much for that, George Tsilis. A really good look at XPeng today.